I was honestly this close to buying NVIDIA, not because I have done professional research on it. I was tempted. Everyone was talking about it and I have to jump on it. AI, insane growth, everyone's talking about it, massive gain. Am I really missing out? And that thought is powerful because when you see a stock keeps going out, it's not about a normal investing decision anymore. It feels like a train is leaving the station and you're standing there thinking, should I jump on it before it's too late? But before I rushed in, I learned about one finance word that changed the way I look at NVIDIA, and that word is beta. And I know it sounds like a finance textbook language, but it's actually simple. Beta basically tells you how bumpy is this stock compared to the stock market, and that's it. It doesn't tell you whether NVIDIA is a good company or whether the price is going to go up or go down or whether you should buy it. Beta tells you how much this particular stock tends to move compared to the overall market. Think of the market like a normal car driving down the road. A stock beta equals to 1 moves roughly like a normal car, but a stock market with beta higher than 1 moves like a sports car. When the road is smooth, it feels exciting because you move fast, but when the road is rough, you also feel a lot bumpier. And that's the part that we often miss. NVIDIA might be an amazing company, but it doesn't mean that the stock gonna move smoothly. It's bumpier. In fact, when I did my research, NVIDIA beta was between 1.83 to 2.2. So it's a lot higher than 1. That means rather than moving like straight line, it moves like this. And that was the lesson for me. A great company can still be stressful investment. And those are two different things. A lot of people see NVIDIA like, it's a strong company, so it must be a safe investment. But not always. A stock can belong to a great company and still swing up and down hard. And that's why beta matters. The overall market has a beta of 1, and that's the likes of S&P 500. If a stock market has a beta of 2, that means historically that stock moved twice as much as the market. So simple example, if a stock market drops by 10%, the stock that has beta of 2 might drop 20%. Not guaranteed, not prediction, but that's the basic idea. And yes, it works the other way too. If the stock market goes up, stock with a high beta will rise even more, and that's when a lot of people gets excited. On the way up, high beta feels amazing. You feel like you finally made a good move, but on the way down, it feels completely different because it's easy to talk about volatility when it's just a chart, but when it is your real money, it's a different story. If you invest $1,000 and the price drops to 800, it's suddenly not a number on the screen anymore. You start checking your app more often. You start watching random videos for assurance. And you start thinking, should I sell? 5 minutes later, should I buy more? Then after that, did I mess up? And suddenly, investing is no longer peaceful, it becomes emotional. And I think this is why understanding beta is useful for everyday people like you and I. Not because we need to sound smart, but essentially, it's a warning label for us when we look at a stock. It's essentially saying, before you buy this, understand that it is going to be bumpier right than the market. And for beginners, that matters. The risk is not the stock market itself, it's our reaction to stock market. You and I buy because of excitement, but when the price drops, we feel unsettled. We panic and we sell. And the stock recovers later, and now we're sitting there thinking, why did I do that? But the problem started earlier. It's us not understanding what we sign up for, the bumpier ride. And that's the mistake that I nearly made with NVIDIA. AI stock, massive growth, massive potential. But do I actually understand what I'm buying? Investing is not just about what could go up, but also, am I be comfortable enough to hold it when things get tough? Everyone says they are a long-term investor when the chart is green. But when your investment drops really low, that's when you find out whether you had a plan or not. And I think this is where a lot of beginners get caught. We confuse good story with good decision. NVIDIA has a strong story, but the story does not remove the risk. And here's the point. Do not buy just because everyone else gets excited, especially when you don't know how bumpy the ride's gonna be. And that's the whole lesson. Before I buy a popular stock now, I slow down and ask, do I understand what this company is about? How do they make money? Why people are excited and what could go wrong? And most importantly, can I stay calm if this drops hard as soon as I bought it? If the answer is no, then maybe I'm not ready to buy it. Or maybe I should invest a smaller amount. And that is not weakness, that is wisdom. We do not have to chase every stock that people are talking about. And make sure Our money decision is not being driven by FOMO. FOMO is a terrible financial advisor. It makes everything feels urgent and it's got to be done right now. But good investing usually requires the opposite: patience and clarity. Learning about beta has reminded me that even an exciting company can also have a bumpy ride. And before I put my money into anything, I need to understand what I am signing up for. It's about making decisions that we can live with, even when the market gets rough. And sometimes protecting our peace is just as important as chasing return. Thanks for staying till the end. If you enjoyed this video, I think you might like to watch this one too. I'll see you there.